What's going on, good people out there? Welcome to Spark and Trades Recap. Uh, let's go through what we went through today. Quite a nice day off the open. Definitely a better day than Friday. To start off the week, let's get straight into it. Promising that I'm going to make these videos a lot less than the 20 minutes that we've been going over. So straight out the open, kind of let the market settle in its volatility that it was doing, and then I decided to pull the trigger and take a trade on NQ. Now, oh my God! So this thing just kind of clocked out. All right. All right. Sorry about that. My phone decided to absolutely start updating on its own just now. Okay. Let me just turn off something. That might help out with the lighting a little bit. All right, cool. So, how did we go about today's trade? Well, we had our levels that we were watching out for. Demand is clearly down here. Supply was clearly up there. We just didn't know which side to trade first. And with that being said, we had the 1 hour that actually was kind of hovering around this area here. We'll zoom into the 15-minute. That's your price action going on here. The 15-minute middle chart is clearly red, telling us that the bears are in control of the 15-minute. The 5-minute was also red, telling us that the bears were in control. Here is your 9:30 line, which signals the bell. So it's basically this candle here that triggered everything for the start. So that's the far right chart here. This is your 5-minute chart. So I always play the 5-minute, and I do this because the 2-minute kind of flip-flops a lot more than the 5. Here we go. So the market is definitely bullish on the 1 hour, and it's also bullish on the macro time frame, I believe. So the daily is clearly bullish on NQ. Let's see it load again. And bear with me, I got to figure out what's going on with this here. That doesn't quite show the code the way I want it to. But yeah, so it's bullish over here on the 1 hour, and certainly bullish on this time frame because there goes your band, your gray cloud, green cloud. All right. But this morning at 9 something, we were close to possibly cracking through the 4 hour money zone to the downside. Don't know what's going to happen. Don't really even care. We just know that that's where buyers are. We just know that this is where buyers are. So which one it is, it's anyone's guess. However, if the smaller time frames were pointing to the downside, I kind of wanted to take advantage of that opportunity because we're intraday traders and we're kind of going with the flow of the momentum until something tells us that there's a change in direction. So market's making lower highs. You can clearly see that it is constantly just rejecting a level up here. Just straight up couldn't pass that. Made a lower high here. The open happens. This dump goes in. And now I'm watching NQ whip. Wakata, woo, wah, woo, wah, bah, right? So it's chopping up in this little area right here on the far right chart. We're going to close the 1 hour. This thing does not really turn bearish really at all. So I'm just going to close that up. Expand this bad boy a little bit. All right, so we can see what's going on a little bit more. So on the 5-minute now, I decide, all right, I'm going to go with the shorts at the money zone. First entry for the shorts was somewhere around here. Once I got in, they ended up going up a little bit more now. I have a 15-point kind of like rule. Actually, I got in where that line is because I adjusted that earlier. So about 13 is where I got in, and I have a 20-point rule before I could stop out. This is about 17 points, and I was willing to push it up a little bit more to like around here. So at that point, I'm pretty much off, and the market could potentially make a higher high, which means that structure tells me I'm wrong. Okay, so with that being said, I'm willing to give the market all the room it needs to do what it needs to do in order to pull back down and continue this downtrend that it was showing us it had a potential at this 2x money zone kind of play. So I call it the 2x because the 15 and the 5 is there. It's a 3x setup when the 1 hour is there, which could potentially flip. We just don't know what's going to happen, but we have to pull the trigger at some point, right? So I get in up there on this pullback. Most people are probably thinking, holy crap, this thing is going to bounce and rocket to the moon. I have rules for why I would continue to take shorts and not think that this thing is going to bounce to the moon. And that's why I can take that entry right here with confidence, because I'm not thinking that this thing is going to rocket to the moon. I'm thinking that this is the breather it needed on that down move in order to send it down again. Now, I'm not often wrong, but I don't have to be right. And you'll see the probabilities. But it doesn't matter if I am. I'm going to stop out regardless. I don't want to sound like, that's some definitive thing that will happen. So the market pushes up. I don't get a chance to get another contract, although I wanted to up there. My last place to possibly get another contract before I mess with my average, all right, my entry average is right here. I don't take it. Market flushes. I'm right now on the trade theoretically, and we just want to at least go 2R before we get out of this trade. So we need to go at least 40 points to the downside. So somewhere down here is where the first exit should be. So let's look at what ends up happening. Market comes down. We're right. We hit that target of 40 points, I think, on this candle that triggered. And I had an idea to get out at this demand line. Now, this demand line is your 1 hour, I believe, demand line. So this is demand that's on the 1 hour. Yeah. You don't want to mess with that bad boy, because when he comes in, he's going to pretty much send the momentum back on towards the other side, or they're going to crack through him. Either or can happen, but I just made a nice 54-point move from up there to, I think I got out like at 58 down here. So 54 points to the downside, and my exit was literally right there on the first wick, on the first candle, because I had that set up to get me out. And that was my short trade for today. Okay. Now, I know you guys seen me do this often, where I would put a possible reversal trade on. And let me see something really quickly. Yeah. I would put a possible reversal trade on under this one condition. So remember I said I'm not going to switch to the upside or think that this trend going down is going to just not go down unless there's a reason for it. My reason for that is this 15-minute demand line that was forming at 13,353. At that point, we know that the market could potentially do a reversal or a pivot. So I called out that this thing looks like it could pivot. Now, I've been struggling trying to take V shapes. I think those are really, really hard because the market bounces away from my entry capabilities, because I'm only willing to lose the lows, right? And that means that I have to get into this trade before we break that level there, 372, and maybe a little bit lower than that. Now, I have ample opportunity to look at this kill box. The market is still within my kill box for at least 15 minutes, and I can execute and just kind of get in and kind of let the trade go with God, or get stopped out. But I decided to call it a quits after my one trade in the day. I want to get into taking every one of these trades, and you'll see why. So this one is a 2-to-1 trade, maybe almost a 3.5. And we hit target on this, so it pushes into purple, so we know the bears are weak on the 5-minute. That condition pulls back here, which is red on the 15. Nothing to be too scared about. Your only idea is, are we going to make a lower low or are we going to double bottom? If we don't do any of those two and we make are we going to make a higher low or are we going to double bottom? If we don't do those two, we're more than likely going to break the lows of the previous swing low, and that means that we made a lower low, invalidates this bullish play. So in this case, we end up crossing that green line, which is your line that the bears held on this rundown, right? That's your trend line. And then it just was off to the races to the upside. So after a pullback, another bounce, we end up hitting target on that. I did not take this trade, but I called it out. Now, once the condition was green, right? Like at this moment in time, the condition flipped green. I'm telling you that, we could take a long trade because the bulls are in control on a 15-5. Well, let's see what ends up happening. The bulls, the bears come in, push us down a little bit. We don't have a 15-minute line that could stop this play yet, right? And at this point, I'm drawing these things because these are divergences that are happening within the chart. So this divergence tells me the market could pull back. It pulled back. This divergence, which didn't come until here, and the market started pivoting, and I'm using the ADUSD to form my divergence bias, tells me that the market could go back up. So I start entering, or I call out a long for this trade, okay? And we don't quite hit the target of 2 to 1. Well, we do hit 2 to 1, sorry. Here's your 1, here's your 2, here's your 3. So we hit 3R, and that's 4. So we're going for 4R on that one. Didn't quite hit 4R, but anytime you hit 2, it's safe to get the hell out of the trade, all right? So very small risk there. Probably would like this setup a lot more than all the other ones that where I'm risking 20. And I should have probably taken that one in the real account, but I, again, like just was on some, I'm done for the day. This was a good bounce back from Friday's loss. So we get up here. Why is there a short play listed? Well, look, we have a 15-minute divergence line forming up there. I called out this orange candle, so more than likely I would have to see that form before actually calling out the play, which means you don't have much time to get in. This next pullback gives you a little bit of time, a little bit of room. Now, the reason why I have the bottom of the Bollinger Band as the target on this, no matter what, if this was a true pivot, it'll break that and we could get extra juice. But the bottom of the Bollinger Band on a reversal is like reasonable. The top of the Bollinger Band on a reversal trade is reasonable because that's where they're going to go before the next rejection happens on this, if this trend wanted to continue. And that's same vice versa right here. So it's the same exact rules. And we just have to kind of like take this trade. So this trade pays out immediately. Boom, hits targets of a definite 2 to 1. And now I called this out because we were at the bottom of the Bollinger Band, and this is where you generally get your bounds. And I saw this first wick. I ended up getting a trade in at the top of this wick here, which this candle would have been a lot better because that's a bottom and tail kind of close. So anyways, I'm in risking the bottoms. You know how that goes. And this trade ends up going pretty nicely. Almost, let's go 1, 2, 3x so far, going for 4, all right? So we'll see if that pays out to the top, but those were the trades that we called out. I only took one, and as much as the day provided an opportunity to go long, like maybe even right here, I guess you could say once you went long on this reversal trade, right? So once we go long on a reversal trade, if the middle of the Bollinger Band holds up, the probability of swinging to the top is a little greater, right? So what I mean is this. You guys don't see these lines or these moving averages because I don't put them on the chart anymore, but I'm going to activate the mid BB band, KC on, BBM on, okay? And what you guys are going to see is that that's exactly where that bounce happened at. So it's your 20 moving average. Most people know that the bounce is either going to happen at the 20 or the 9. Some people use the 8, right? The 10, whichever ones that are your trend bounce levels. And that's what this money zone, this green money zone is here. So, like I said, if we push up and break above that line, but don't quite make it to the top of the Bollinger Band, which is kind of where target is what we're targeting. If we pull back and this mid BB band, I call it the mid BB band because it's the middle of the Bollinger Band, but it's a 20 moving average, simple moving average, I believe. If this holds up, you can get that next momentum push to the upside. So this here could be another play, right? So I mean, I don't know, maybe we call it the mid BB band reversal entry, right? And that way we're in way down there with a possibly better risk, right? Because this push up is kind of the thrust you want. Then you consolidate into the money zone, and then boom, you thrust up again. Now over here it doesn't work because we had a 15-minute sell-off. The conditions for the market to come down aggressively were there, so that's why we had that sell-off. So then we have this possible bounce again from the bottom of the Bollinger Band, which if we pull up the 1 hour, so if we pull out the 1 hour, that's around this area here, okay? So this area here is literally your 1 hour zones right there, okay? And that's just another money zone plus the bottom of the 5-minute Bollinger Band that's going to potentially cause this ripple effect to the upside. And that's the logic behind why I would take that trade, that edge to the upside. Now, you know, a lot of this stuff, it's pretty simple to go bullish after we had this reversal and it passed the test of having at least 2 green bands. That's what makes this, I think, a very simple system or a setup. And I hope you guys can kind of do this on your own. If you need classes or a one-on-one with how to interpret it, because I know you guys are watching this on YouTube but don't quite understand everything that you're seeing, I can give you the breakdown from how I generate these lines to know or to kind of feel sense or create a plan to go long somewhere down there. Now, I'm not just going to go long off of a support or a resistance line or a demand or a supply or demand line. But if a 15-minute demand line forms and a 5-minute demand line forms, that's a trade that I would take, right? Because the probability of what I've seen under those conditions heightens greatly. So, you know, you just kind of have to execute with a really decent stop and just kind of like just walk away from the screen. You know, it's like, what else are you gonna do? You know, it's not like you can do anything. So that's my daily recap for today, May 15th. We had a total of 1, 2, 3, 4, 5 trades, possibly 6, and they all became really good bangers. So no matter which way the market goes, we just have an idea, a trading idea that may or may not work, but it's at the levels that are not necessarily extreme. Like, this is an extreme play because the market bounced. This is an extreme play because the market rejected. But this is not an extreme play. This is a trend play. This is a trend play. And this would have been a trend play. So everything is not just not an extreme, you know, reversal trade, but a lot of this is a trend trade. The trade I took this morning was a trend trade, and that ended up paying out. So I hope you guys kind of know why we took this trade. 2 red conditions matched, go with that. 2 green conditions matched after this point, or rather that point, go with that. And that's why we were taking that long. And, you know, it kind of eliminates the whole fogginess of the market, not knowing which way it's going to go, thinking it's going to go down. Don't think, just trade the chart. Like, I try to stress that to myself. Like, I think it's going to go down. Forget that. What is this chart doing? Because the probability of it bouncing out of the cloud is kind of more than or higher than what your thought is, what your feeling is. So yeah, so just to really quickly, the break of this line here should be when that 15-minute supply line kicks in and sends this market to the downside. So that would be that supply line break. Okay, and as you can see, they don't always have to do this massive move up. This hit the top of the Bollinger Band, which is target, came back down, bounced off of that, came back down, bounced off of it again for another swing up. This means the bulls are strong. Once you see us touch the top of the Bollinger Band again, the bulls are strong. And if the bulls are strong, go with the bulls. But what about this move down? Well, that shows you that we had a reversal, right? The referee blew the whistle because the market was out of bounds above the Bollinger Band, and a 15-minute volume line came in, so meaning supply volume came in, and that tells you that sellers are up there heavy, and they moved the market down way more than just the money zone in this case. So maybe that's that. So like I also apply, just really quickly, I'm going to end this video now, but I also apply where's the enemy at during my trade. I know that once I got into this trade, this dot here on the 5-minute tells me to take profit. The wick comes in. It was all the way down there. The wick comes in. We move up. I could either leave or, kind of stay in the trade. I stood in the trade. Another take profit dot, consolidation, which is basically a bear flag. They hit the money zone, shot down again, take profit. It's trying to tell you that the price is out of the Bollinger Band, and it more than likely, with probability, will come back into the Bollinger Band. And, sometimes when you're trading, you don't have time to kind of like analyze all of this stuff. So it's great to have a visualized concept of it. Like, okay, I should be taking profit here. So, for all my heavy, size traders, you're taking it from up here, going down there, exiting a little bit, going down there, exiting a little bit, holding, exiting a little bit. You probably should be getting the hell out of the trade here. Or once you saw that 15-minute demand line. So that's what I mean by knowing where the enemies lies. Once that 15-minute demand comes in and you're in a short, you might want to take some profit. If not, just kill the trade, because to go through this now, you have to wait for the next swing down, and it's not a bad thing, but who knows when that's coming in this triple threat bullish market. So guys, this is Spark here with Spark and Trade. Today was a really, really great day to trade. Despite the aggressive moves to the downside and the swing to back to the upside, and the consolidation that happened throughout this entire block here, right? Like, this is just straight consolidation. I mean, it's not really moving anywhere or trending the way most people like. But if this thing pops up here, then you're gonna be like, oh wow, this thing did trend, right? Like, you're not really gonna see that, and that's what I like to stress. Like, when I trade, I don't know what's gonna happen. I don't really care what's gonna happen, because if I get into that, it affects my ability to enter. Like, oh, maybe this is just chop, I'm not gonna enter. Well, I just made 40 points on chops, and I didn't know it was gonna happen. Probably would have got chopped 20 points and back down. I don't know that. I don't really, that's not my job. So I try my best to really, really, really stay neutral in this market until, just stay neutral until I'm invalidated, and structure is invalidation to me. So I hope you guys learned a lot from today's recap. We're going to keep trying to pump these things out and help you understand the code a lot better than, just kind of visually seeing me trade throughout the day and not knowing why I'm taking the trade, although I pretty much explained it to the T. But this is that trade for the shorts. This is the long trade. Did not take it, so you don't see any arrows. Another long trade, another long trade. All right, let's get into the NQ, the ES trade. So I also took ES, and that was way later in the day. I got stopped out just now at the close. So the ES trade, I got in, just bear with me really quickly. Yes, this is your 242, 240. All right, so that's about right before this candle starts. So my entry was right in this wick. All right before we left the money zone is when I remember trying to get into this trade. Okay, so I get into this trade, risking this swing low. Market comes all the way up, immediately putting me in a nice like P&L. Comes back down. I take another 2 right here. All right, I just got everything out right over here on this dump right here. So basically right here. And the reason for that is because we're in the after hour and we could slowly grind down or up, and I'm not going to really have the momentum necessary or the capacity to really deal with it. So, we definitely didn't go all the way up to the 63 like I wanted. But on this too, it was a nice lick. Nice lick, nothing bad, nothing crazy. But definitely, like, I think 1 R. Yeah, almost 1 hour. Okay. So I'll take that, right? And we don't know what's going to happen. This is supply area. I don't want to leave that overnight and with very little volume. But as you can see, this market did the same exact thing. Came down in the morning with actually it was a triple threat on, no, it was a double threat, right? At the time, that candle brings us down so much that it turns us red. But now look, this is red, although the market's pumping up. So, you kind of have to give a little bit of merit to that, but not completely like just make that 1 hour I'm going bearish because this thing is bearish. And you could go bearish. Nobody knows what's going to happen, but you better stop out if we swing high, because that squeeze is what you don't want to be. You don't want to be the last person exiting a squeeze. You want to see this level that's going to break on this 5 minute. This is where your squeeze is happening. So in other words, I'm saying on the far left side, if you took anything around this zone, that's your 1 hour short zone. So that's your 1 hour short zone. So that's around where on this time frame, right here. That's where that circle is. All right. So anything up here is what you're trying to short. And you're making a little bit of money, comes back, make a little bit of money, comes back, make a little bit of money, and then they flag and squeeze all the shorts in this area out. And that participation of shorts have to buy in order to get out. So the breakout, they're buying, and sending the market up. The guys who went long for the potential flip of the 1 hour and kind of trusted the 5 minute bullish momentum that was happening already and the sentiment of the market and this pivot that happened because the 15 and the 5, right? There's a lot of reasons why I would understand the longs here. And under this flag here, we have purple candles on the 15-minute. Anytime you see that, you do have bearish weakness. So over here for this bounce, it was dark red into the money zone until we broke above it, and now you have bearish weakness. That weakness tells us that the bulls could take over. They took over right here with a green candle, and this pullback now is dark green. A dark green is a bullish pullback. So these guys could win or lose. Doesn't really matter, but you need to pick a side during this consolidation and more than likely hope that you're right on which side you pick. Now, at the time, you basically have the 1 hour and the 15-minute bearish. So even if I went short there, I would have gotten clapped, but only a very small, for a very small lick, because more than likely I'm going to get in somewhere around here and get stopped out there. Right, so that's that. On ES now, it shoots up, creates a 5-minute line, but everywhere else in the market had a 15-minute line. I didn't take this short, but now we're back at the money zone, right, in the bottom of the Bollinger Band for the possible bounce. That happens, comes back, consolidates, happens, and now I'm interested because I'm thinking, all right, this is a friggin' 15 and 5 minute and 1 hour bullish momentum play. So I take it, and it ended up working. I wanted to go all the way up there, and maybe we do get up there, I don't know. But I wasn't willing to, do the overnight thing. So I'm out. And that was the ES trade. That was not bad. I like the trade. It was pretty nice. And as I was talking to Cash, welcome back, Cash. Everybody give him a round of applause. Yay, welcome back, Cash. I told him about taking this trade and how this dump would normally freak us out. Like, my stop is down here. This is literally a great channel that they're forming right here. Market's catching some real live support right there, and it's catching some real live resistance right there. So I bought at the right side of the market. I just have to wait for the oscillation back to the top and either take my stuff out or kind of let them bring me back. But if it stays within this channel is going up. Should be a nice trade. We'll see what ends up happening there. Okay. So that was your ES trade there. Now, I also took an Apple swing. I'll talk about what I see here. Apple has nothing to do with today. Oof, look at that. What the hell just happened there? Hope that doesn't trigger a downward volatility or momentum, but we'll see. So Apple was straight up a macro kind of trade. The daily is green, the 4 hour is green, and So at the money zone on the daily, the 4 hour was at demand, which is way down here. Okay, so we're trying to allow this demand level to swing us back to the top. Now we've gone 1, 2, 3, 4, and not really 4, I guess, right? I mean, I guess you could count the wicks, but basically we're down here again, and we just have to see what the market does. But at the end of the day, I ended up taking the trade on a higher low probability here, thinking that we could be up here, right, in no time. In this case, it dragged me down. I could have gotten out here, even here, just killed the trade, not dealt with any of this. But I closed negative $8 on a 4-day swing. So it's like, okay, if it's 4 days, I could hold that and see what ends up happening since I'm at the bottom of the rotation. So we'll see what happens there. Really quickly, we can check in on Chewy, CHWY, Chewy. This is where you can order dog food, guys, or any kind of animal food or toys, etc., etc. So let's just go straight to the macro because this micro is just going crazy. Excuse my chart load time, by the way. So Chewy, we did not get in on this circle here. We got in on this one. So I had to suffer this pullback on the contract. Probably could have gotten it way cheaper there. Now the condition was better right here than it was there. We have the double bottom wick outside of that 50 HMA. And once you see that, the possible rotation to the upside can come. That's when money starts to flow into the stock. Money starts to flow into the stock. Money starts to flow into the stock. Money starts to flow into the stock, okay? And we're doing it at a very specific level, which is the standard deviation 2. So we like that kind of rotation back to the upside, which could go all the way up to 51. I don't know. I'm only taking this thing up to like 39 or something like that, right? That's your first target, and then there goes the second one. But I only gave it 30 days, so it has to perform really within the next couple weeks, and we'll see how that goes. And then Etsy, I know you guys know this company. Had a powerful day today after a mean downward day. If we can break out of this and go back up, my level there of 96.72 is when I entered this high as stock. Now I could have waited potentially for the pullback there, but I got a 100-day contract and it didn't affect me at all to go down here and back up there. Now that could be because it's a 100-day contract, but Etsy met the requirement of being down here in D2 land and potentially when I got it, which was on this day, being on a run up. But now look at this, that pullback came right back to the daily 50 and then it bounced like that. So the condition, the idea, everything that I kind of want to see is there. Now, what we don't want to see is go from purple to red, because it's just going to pretty much drag us down and the contract down. So we need this thing to kind of kick in, start shooting back up to 110, and possibly 130, 140. We'll see what happens, but that's a really long play right there, and I like it. So that would be my recap for today, guys. Those are more swing plays there. We do have the ES trade and the NQ trade that we took, although NQ had a lot of opportunities, ES had a lot of opportunities, but within the scope of green demand, red supply, that's kind of where we're looking to take the trade for the bounce. Hope you guys had somewhat of a great day, if not spectacular. Once again, Joel Spark from Spark and Trade. We'll do this again tomorrow. All right, guys, peace.